Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it is turning out to be a session where we are seeing some amount of consolidation for the markets come off the day's high. So that initial gains that we did see have been sold into. We have the Bank Nifty, which is down over 200 odd points. We have the mid-cap index, which has given up gains from the top, along with the Nifty and the sensex as well. This Nifty, in fact, is the lone ranger amongst all of these four indices. The sensex Nifty mid-cap index and the Bank Nifty, which is managing to just about hold with a gain of around 20 odd points. Let's see whether that gets sold into or not. As of now, the advance decline ratio is just about holding in the advancing side. So that's a key metric to track, which is positive. As you can see, it's been, the gap has been maintained through the trading session. So around 1,780 odd stocks advancing on the National Stock Exchange and over 650 stocks declining. But joining us today, we have Astha Jain of HEM Securities and Ruchit Jain of 5paisa.com to answer all of your queries. Astha as well as Ruchit, welcome to the show. Well, Astha, seems as though you're dressed to definitely celebrate Rakhi today. Markets are open, but nonetheless, celebrations are on. Ruchit, I'll start with you. The markets have given up a little bit of their gains. We have the Bank Nifty, which is under pressure. Can you give us a sense in terms of where the Nifty would go from here? What's your strategy today?
Yeah, hi, very good afternoon, Ekta. Well, Ekta, if we see the recent correction, which was there from 25,000 to 23,900, markets have seen a retracement of about 61.8% of that fall, which is coming around 24,625. And I think that's why we are witnessing some consolidation or hesitant to surpass that level. But looking at the market breadth, which has turned positive since last couple of trading sessions, the large caps from stocks names such as IT, even selective auto names have been doing well. So I think the momentum would slowly and gradually continue on the positive side. So from here on, downside seems to be limited, and any kind of decline, if we get towards the 24,400 to 350, I think that's where the support will come in again. So the overall structure remains positive looking at the market breadth, and it should be seen as a buy and dip market until we see any kind of significant supports getting broken.
Okay, all right, fair enough. We do have a couple of queries now. First one is Chandan Kumar, who writes to us from Mumbai. He holds 135 shares of Gujarat Gas, which he's bought at 645. He wants to know what to do, whether to hold or sell this particular counter. Gujarat Gas, he's bought it at around 645 odd rupees. He's sitting on a loss at this point in time, which is around 6,500 odd rupees. Let's start with you, Astha. What would you recommend on Gujarat Gas?
Hi, good afternoon to both of you, and wishing both of you a very happy Raksha Bandhan, and to all the viewers as well. So talking about Gujarat Gas, I think the results were good, because what we have seen in the quarter 1 of FY24 was the 52% rise in their bottom line. Along with that, the pricing or the price to earning multiple of around 32 compares to be on an average side, because the industry P multiple is standing somewhere at around 34. So I think looking after a decent set of numbers from this counter with the average valuation, I think one can stay invested in the counter. There is no need to book the loss. So my advice is hold the counter, and I think a rise of around 10 to 15% in the stock prices can be expected from this counter in the coming days.
Okay, all right. And what about the technicals? 12 months, it's gained around 30 odd percent, Ruchit. What would you recommend on Gujarat Gas?
Technically, if you see, then in the short term, I think the stock would consolidate within a range of 560 to 650 on the higher side. It doesn't seem that the stock is in a trended phase. And if I do some comparative analysis of other stocks within the same sector, that is IGL or MGL, then a clear relative outperformance has been seen in the other two names compared to Gujarat Gas. So this has been a relative underperformer within the sector. So I would suggest, if you get any kind of pullback move towards that 630, 640, take that as an opportunity to exit from this stock. And if he wants to remain invested in the same sector, it's better to shift to stocks such as MGL, which is outperforming. And in case if the sector, all the three stocks move higher, then I think that outperformance from MGL could continue, because even the volumes are quite good there compared to Gujarat Gas. So look to exit on pullback moves in Gujarat Gas and shift to MGL would be my take.
Okay, all right. We now have Ramesh, who writes to us from Hyderabad. He holds 2,200 shares of Vodafone Idea, which he's bought at around 13.25. He's sitting on a profit on that one. He wants to know what to do, whether to hold or sell this particular counter. Well, Ruchit, I'm going to toss this over to you. What do the technicals say in a stock such as Vodafone? Do you think that it has, the ability to become a multi-bagger?
Well, let me give a disclaimer first that recently the stock came out with an FPO at 11 rupees, in which even I had subscribed. So I have a holding from that FPO time. Now, if I look at technical structure, then the stock has good support around that 14 to 14.5 range. So price-wise, I think downside seems to be very limited. Yes, if you're looking from next few weeks perspective, then I don't think that we would see any kind of significant up move as well. So 18 to 14, I think this is the range where the stock could see some consolidation for maybe a few weeks or even a couple of months time frame. But yes, on a longer term time frame, the kind of volumes that the stock has seen in last 3 or 4 months, this clearly indicates a shift in sentiment of market participants towards the stock. So from a mid to long term perspective, no, I am positive on the stock, but from a near term perspective, I expect some consolidation to continue.
Okay. All right. And what about you, Astha? Do you think that there will be some kind of fundamental support which will come through on the stock?
Not really, because what we have seen that the revenue was down marginally, in fact, in the Q1 of FY25. Although we have seen the rise in ARPUs, and that was led by the higher monetization, etc., and the more increase in the recharge vouchers, which was demanded by the client. So I think we have seen the increase in ARPUs, but the debt is still a concern for this company because they are standing at around rupees 2 trillion debt. So I think that is a major negative for the company at present moment of a time, and we really need to see how the company will be repaying that over the period of time. So I think one need to wait patiently for a long time, maybe for 6 months or 1 year time horizon to get the strong rise in the stock prices. But at present moment of a time, if someone is hurry to book the profit, then I think because the investor is already in the profit, so partial booking of profit is also recommended at current point of time. So my idea here is just to this investor, because he or she is into the profit, book partial profit and remain holding the another partial quantity for another 6 months or 8 months.
Okay, all right. So that's on Vodafone. So you would probably recommend holding, partial quantity for the next 6 to 8 odd months. Well, we now have a query on Asian Paints, which has come through. We have PCH Aya, who writes to us from Bangalore, holds 60 shares of Asian Paints, which is purchased at 2,900, wants to know the outlook of these particular shares, sitting on a good profit at this point. Well, there's so much, Astha, which is spoken about when it comes to Asian Paints, the competition that it'll probably see. But from a long-term portfolio stock perspective, do you think that one should hold on to Asian Paints?
Yes, for the long-term purpose, definitely a hold is recommended because what was the attraction in the management guidance is that they have still maintained the EBITDA guidance of around 18 to 20%, which seems to be fairly okay. So I think they have maintained their guidance, and what we are seeing that maybe we can see some sort of a double-digit volumes also in the Q2 of FY25. So I think if we see such sort of volume, then definitely it can lead to the strong financials going ahead. And maybe we can see the rise in the stock prices also. So in the near term also, we are expecting the stock to move till the level of 3,200 or 3,300. And definitely it's a hold from the long-term perspective.
Okay, all right. A hold from the long-term perspective. And what about the technicals? Does that give you any kind of confidence, Ruchit, for Asian Paints? It's a nifty stock portfolio company, but, hasn't done much this year. In fact, it's declined around 9%. Would you, be a holder?
Yes, in fact, I have the similar recommendation to hold on to the stock. So technically, if we see, then the stock has gone through a long consolidation phase. The all-time high in the stock was seen in January 2022, when the stock made a high of around 3,600 levels. Since then, a broad consolidation phase has been seen where initially we witnessed a decent price-wise correction, but now the stock has also seen some good time-wise correction as well. So if we look at the bit longer-term picture, then the stock has already gone through some time-wise as well as price-wise corrective phase recently. And so the downside from here on seems to be very limited. But because what we are seeing that whenever the stock dips towards that 2750, 2700 kind of range, a good buying interest has been seen over there. So I think the downside seems to be very limited. Yes, so from a long-term perspective, I think these are not the prices where one should look to exit from stocks such as Asian Paint, but rather keep some more patience and hold. I think the stock has potential to rally back towards that 3350 mark.
Okay, all right. Well, we have another query on another nifty stock. We have Preeti Sharma, who writes to us from Patna, who holds 50 shares of Infosys, which is bought at 1700. Again, sitting on a profit there, wants to know what to do, whether to hold or sell this particular counter. Well, let's get to you on this one. Astha, let's start with you again. What would you recommend?
So we recommend hold on this counter. We are positive on this counter because we believe that this company will show improved financial performance going ahead because they have a strong pipeline. In fact, they have acquired a German company, tech company. So I think the synergies will be developed from there. And they have invested, in the generative AI also. So I think all these factors will really contribute to the strong financial performance going ahead. So definitely hold from our side. In fact, buying on dips is also we advise at present to our clients. So Infosys is definitely a hold as well as buy. From the perspective of price target, we recommend it to go till the level of 1940 or 2000. So we are expecting 2000 as the ultimate price target for this counter.
Okay, 2000 is the ultimate price target for Infosys. On the technicals, is that your target, Ruchit? Are you close to that? What's your recommendation?
Well, the technical targets are coming a bit higher from those levels, which is 2160. So if we take the structure first, then a clear high top, high bottom structure is there in the stock since last 2.5 months. And what we have seen that in the recent decline as well, when the IT stocks corrected because of this global markets volatility, Infosys managed to hold about its 40-day exponential moving average support. So I think that uptrend is still getting continued. And if we take the retracements of the previous corrections, then it gives a potential targets around 2160. So I think from a bit medium-term perspective, the stock has potential to continue this rally towards 2160 mark. So definitely a good risk-reward ratio even from current levels. So it should continue to hold on.
Okay, all right. So continue to hold. That's the word coming in on Infosys. Well, for the markets, we're seeing a little bit of profit booking, which is coming for the bank nifty. So just want to emphasize that a couple of these, corporate private banks, Axis Bank, for example, is down around 1.3%. There's profit booking, which is coming in on ICICI Bank also, which is down around 1%. And IndusInd Bank giving it company as well. That stock has underperformed this year with a cut of around 15.5%. So IndusInd is also seeing some amount of profits being taken off the table. And giving it companies, HDFC Bank, that big boy is down around 0.4%. It's lost around 5% this year. We'll take a short break, but up next, more queries. Stay tuned. Welcome back. Well, you're still tuned into Your Stocks. We have with us Ruchit Jain as well as Astha to answer all of your stock queries. Well, let's get to another query now. We have Kalamani Sekhar, who writes to us from Chennai, holds 10 shares of Sun TV, which is bought at around 752. So he's sitting on a little bit of a profit there. He wants to know what to do, whether he should hold or sell. Well, his buy price is 752. He's currently sitting on a little bit of a profit. But do you think that there's any kind of upside to these levels, according to you, Ruchit?
So we have seen a decent amount of up move in last 3 or 4 months, but what we have seen during the last week that the price correction was backed by very high volumes. And generally, when we see such down moves which are supported by high volumes, then those stocks can tend to show relative underperformance in the short to medium term. So I think I would advise to at least book partial profits over here and take some money off the table. And on rest of the positions, technically the support is placed around 750. So you can keep a stop loss below 750 on the rest of the position. But at least the stock is not looking that it would show a significant outperformance in the near term.
Okay, all right. And it's gained significantly in the past 1 year, over 45%. But fundamentally, what's your view on this one? Astha?
So even I recommend to book partial profit. The reason being is that whatever results they have posted in Q1 of FY25, we have seen the degrowth of around 12% in their bottom line. So bottom line was a little bit under pressure. In fact, if I talk about the valuations also, they are quoting at a P multiple of around 17 to 18, which seems to be fairly reasonable. So I think some profit booking is a better choice at the present moment of a time, looking after the weaker set of numbers from this counter. Maybe in Q2 FY25, if they perform better numbers, maybe one can take another buy call, but at present moment of a time, it's better to book profit.
Okay, at present, it's better to book profits at this point in time for Sun TV. Well, we do have K. Karthikeyan, who's writing to us from Chennai. He holds 220 shares of Cosmo First, which he's bought at around 650. So he's sitting on a very good profit on Cosmo First. And he's a long-term investor, wants to know what to do, whether to hold or sell this particular counter. So 52-week high is at around 985. So it's probably already there. But it's been a strong rally from its lows of around 450. Ruchit, what would your target price and stop loss be on this one?
So one notable thing is that the recent up move since the month of June, that is in last 2.5 months, the volumes have been quite good along with this price up move. And any kind of corrections that have come, the stock has managed to take a good support around that 40-day exponential moving average. So I think trailing stop loss would be the best method to ride this trend. The good support now is around 830, which is also quite above its buying price. So keep a stop loss below 830 and trail the stop losses higher at the stock as the stock price move higher. And initially you can expect a target somewhere around 1150 where you can have a look or have a review on the positions.
Okay, all right. And have you looked at the stock fundamentally, Astha, Cosmo First?
So this company being the global leader in the specialty film as well as emerging leader in the specialty chemical, they have posted very strong set of numbers. In fact, if I take out the other income, extraordinary income, etc., then they have shown the turnaround in this quarter, which is really a commendable performance. And that's why I think the stock prices has also moved in that direction only. So we are positive on this counter, looking after the strong set of numbers, recommending a hold. Our initial price target is 1035 for this counter.
Okay, all right. Well, we do have Ranga Reddy now, who writes to us from Chennai, holds 20 shares of Trent, which is bought at around 5,381. He's sitting on that. He's sitting on a profit. He wants to know what to do, whether to hold or sell this particular counter. Well, we just had some comments with regards to Trent coming in from Ramdev Agarwal earlier in the morning as well. Even if he bought it at a high price of over 5,000 odd rupees, he's still sitting on a profit considering the kind of momentum that we've seen on this stock. And in fact, it's corrected from its 52-week high of around 6,745. Just wanted your sense. Let's start with you, Astha. Do you think that these punchy valuations justify the fundamentals going forward? What's your earnings estimate which you factored in for Trent, and what do you recommend to your clients at these levels?
So I think as long as the company is posting strong growth in their bottom line, these valuations are really justifiable, because what we have seen in the quarter gone by was around more than 200% rise in their bottom line. And I think if such a extraordinary rise we are seeing in the growth, definitely that leads to the higher valuation. And we are expecting this counter to continuously showing strong financial performance at least for coming 1 or 2 quarters, because we have seen that their all formats are performing very well. We have seen the improved footfalls, and especially the Zudio is really working wonders for the company. So we really expect this company to post the performance of this sort for coming at least 1 or 2 quarters, and that's why we are positive on this counter. But yes, now valuations have started playing their role, so we are limiting our price target to 6,900 at current moment of a time, recommending a hold with a limited price target of around 6,900.
Okay, all right. Target price of 6,900 on Trent. What about you, Ruchit, on the technicals?
The momentum is quite strong in the stock. We have seen that whatever corrections come, it hardly lasts for 3 to 4 days, and again the stock resumes its uptrend. If I put some retracements of this recent correction, then it gives a potential targets around 7,100. So it's quite possible that we may see a continuation of this up move towards 7,100. So can hold on. But yes, post the recent rally, they are also in bit overbought zone. So do not forget to keep some stop losses in your profits. So ideal stop loss from the current market perspective would be below 6,300 level. So because that is the support on the short term chart. So keep a stop below 6,300 for now and look to book profits around 7,100.
Okay, all right. So that's the target coming in, bullish calls coming in from Trent. But now we have Vijay, who writes to us from Thane. He holds shares of Angel One, which he's bought at around 2,200. So he's sitting on a profit there. And 50 shares of CAMS, which he's bought at over 4,000 odd rupees. He wants to know what to do, whether to buy more, hold or sell these particular counters. Ruchit, you take this one away first. What is your recommendation on the technicals of this?
So technically, Angel One looks positive. We have seen a decent corrective phase from the highs of around 3,800 to 2,000 levels. And now, if you look at today's trading session, the stock is on the verge of a breakout from a falling wedge pattern with good volume. So I think you can expect a move towards 2,800 kind of levels. So can look for fresh buying as well at current levels for potential targets of 2,800. CAMS will be a hold. The broader trend for the stock has been positive, but since the stock has already given a decent rally, so I think it's a buy and dip approach should be stock that in case if we get any kind of declines towards that 4,040 to 100 range, then those would be good levels where the risk reward ratio will become favorable for fresh buys. But yes, if existing long positions are there, then no signs of reversal for now. So continue to hold on existing longs.
Okay, and what about you, Astha? Any recommendations on both these counters?
So first of all, talking about CAMS, we are positive on this counter, recommending a hold on this counter because we have seen the strong performance and the growth was mainly driven by their non-MF business. And we are expecting this non-MF business to continue to show 20% growth over coming quarters. So we are positive on this counter, recommending a hold on CAMS with a price target of around 4,900 at the initial level. Now talking about Angel One has also shown very strong performance. Or what we have seen now, the company is venturing into the businesses like wealth management, etc., distribution, etc., and asset management also. So all these businesses, we really need to see how they will be acting for the company in the future. But at present moment of a time, on the basis of their increased share, I think this company has performed well. Although the number of trade has declined, but their number of client addition is really good. And in fact, they have surpassed the industry client addition level. So on that basis, Angel One is also looking good to us, recommending a hold, but initial price target can be set at around 2,450 to 2,500 levels.
Okay, all right. On that note, Ruchit as well as Astha, we're going to wrap up on the show. Thanks very much for joining in and taking us through all of those questions. Well, just want to wrap up with the news that the advanced decline ratio is managing to maintain on the positive side. So it currently stands at around 2:1 on the Bombay Stock Exchange. The only possible place where we could probably see some more of a retracement is the Bank Nifty, which is one of the indices which is in the red, down around 158 odd points. Like we pointed out, a lot of these corporate banks are currently trading with losses. But besides that, we even have another rate sensitive such as M&M, which is your top loser on the Nifty. That stock is down around 2%. That's all the time that we have on the show. Do remember to email us your questions. We'll address them with our experts. Closing the line.